This is Eric Umuado with Umuado.com. After the close, Monday, April the 13th, 2009. I gotta start off the video first by saying, honestly, if you have not been making a killing in this market over the last 5 weeks, you really do need to reconsider what it is you are looking at, because this market has been extraordinarily very giving. I mean, if you made the mistake of going long about 5-6 weeks ago, and especially if you've been lucky enough to have held, the gains are phenomenal. I mean, absolutely amazing returns. And so I'm just gonna urge you, if you're not making incredible returns over the last couple of weeks, and of course not all your picks are gonna be fabulous picks, but as long as your portfolio should be reflecting a market that is up 30% on the Nasdaq over the last 6 weeks, at least your portfolio should show some incredible returns. If you take a look at the Nasdaq 1-year daily, we almost close unchanged in all markets today. But what is more interesting as we go into the week is we have this RSI top lines, which is now giving us some kind of formidable resistance here. So this is turning out to be a very tricky area for the market. We might eventually stall, but immediately we are going to be met with downside support right here, as shown by this downward RSI low support line here. So we are actually right at the tip of this, let me call it a very tight wedge type formation. Now, I had labeled my video on Saturday video a cheat code, and the reason why I was calling it a cheat code is because we can use other markets and other sectors to have a leaning as to where this wedge is going to resolve. Okay, we can cheat a little bit by considering other markets worldwide, or even sectors within the US market, to see where this resolution might take place. One of the things that is a little bit of concern if you are long, and the reasons why you should always keep trimming your gains. If you have gains, continue trimming them, because if you look at the Nasdaq Composite Bullish Percentage Index, wow, wee, I don't even know what it means. But anyway, if you consider this instrument, if I can call it that, over the last, and this is I think probably a 2-year chart. This is 2-year chart. If you consider a 2-year chart, every time we've been oversold right here, this has been a time to sell the market over the last 2 years. And every time we traded in this oversold area, that was a time to go long. Just like we use this instrument right here to start going long towards the end of the beginning of March. So when we are really overbought, or you've had a nice run, and it's only natural that we get a pullback soon. Now, if you take a look at the DIG is showing that, and I spoke about this over the weekend, still stuck in this wedge right here. We had a down day today for DIG, and this is a 1-year daily. And what we see is that now we are back into RSI lows support right there. So, you know, the general market is already struggling with the top lines. This market is struggling, I mean, at least it's finding support on the downside. So we haven't seen a break even on instruments that have yet to break out. But we can use a cheat code to see where markets are deciding to resolve. If you take a look at the XLF, and this is an 18-month daily chart, notice the XLF over the last couple of weeks was struggling to break out above this RSI top lines, which is a red line here. We were struggling, and we kept playing around this area here. But last Friday we had a very powerful consciousness shifting breakout for the XLF, and today we had a follow through. So we see that, after we struggled with a breakout, some markets are actually breaking out, and the breakouts are huge breakouts. So that's why I say let's lean towards the market struggling to break out, might even pull back, but eventually it seems like there's so much thrust, so much pressure for these markets to blast higher. If you take a look at the German market, the DAX, and this is a 1-year daily for the DAX, today you saw they broke out of a range, out of a 5-day consolidation period, which is very good action right here. We have a flattening out 50-day moving average, which is another sign of a stabilizing market, and a breakout, and a fresh breakout. And this is a lagging market. The European markets have been lagging. But what is encouraging is, and I wanted to show this, that we have RSI, which was actually stalling on a breakout, was stalling to break out here and here. But now we have a confirmation of a slight breakout. And since markets move in increments, this is exactly what you'd like an instrument to do if you're long. So that's a breakout on the German market right there. Now consider the Brazilian market. This is a Bovespa, 1-year daily. 1-year daily. What we see here is confirmation that emerging markets are where we find market leadership. This is a move above the 200-day moving average, which is now showing signs of flattening out for the first time in about 7, or actually about 10 months, something like that. Since we flattened out here and we started trending lower, now we seem to be forming some kind of a flat 200-day moving average. This is a very strong gap up and breakout move above the 200-day moving average. So even if we get a pullback, initially the market is going to find support now being offered by the 200-day moving average. If we have a very big sell-off, eventually we might trend lower and find support from the 50-day moving average. So we see a market with showing us different characteristics, different behavior as compared to the last 18 months. And also notice that this market had already shown it had been struggling to move above the RSI line here, here, and here, but recently in April we broke out, came back tested it, and now this continues to be a market that continues to show breakout strength. If you take a look at the Chinese market, and this is a 1-year daily, take a look at this breakout right here. Powerful breakout as of Monday's trading action. Right here, this is after we consolidated here for a couple of days, even had moved below this line here, but we've since blasted out of this range. Very powerful breakout. And now from a psychological standpoint, this is, this would be called the crash right here in October, the crash of 2008 right here. Now we are above this level right here. We are way above this level, which shows this market really wants to move higher. And notice we have what they call the golden cross, I think. But this is a very bullish crossover between the 50-day moving average and the 200-day moving average. I almost went blank there for a second. Okay. All right. I bet you all noticed that FAS closed above the price, FAZ's price, which is again another change in market psychology. The market always moves in increments, and sometimes we might look back and this is going to be a watershed moment for this market, as FAS for the first time since inception closes above FAZ in price. Great day for those who are long. This is Eric Mwade, themwade.com. Seriously, if you are not owning stocks that are making you money, you need to reevaluate your strategy. Again, peace and blessings.